Good morning, ladies and gentlemen. Welcome to the Q2 FY21 conference call of Hindustan Oil Exploration Company Limited. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touch-tone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Anuj Sonpal from Valorum Advisors. Thank you, and over to you, sir.
Thank you. Good morning, everyone, and a warm welcome to you all. My name is Anuj Sonpal from Valorum Advisors. We represent the investor relations for HOEC Limited. On behalf of the company, I would like to thank you all for participating in the company's earnings conference call for the second quarter and first half year ended of financial year 2021. Before we begin, I would like to mention a short cautionary statement. Some of the statements made in today's conference call may be forward-looking in nature. Such forward-looking statements are subject to risks and uncertainties which could cause actual results to differ from those anticipated. Such statements are based on management's beliefs as well as assumptions made by and information currently available with management. Audiences are cautioned not to place any undue reliance on these forward-looking statements in making any investment decisions. The purpose of today's earnings conference call is purely to educate and bring awareness about the company's fundamental business and financial quarter under review. Now, I would like to introduce you to the management participating with us in today's call. We have with us Mr. P. Elango, Managing Director, and Mr. R. Jeevanandam, Executive Director and Chief Financial Officer. Without much delay, I request Mr. P. Elango to give his opening remarks. Thank you, and over to you, sir.
Thank you, Anuj, and good morning, everyone, and a very warm welcome to our call on quarterly results Q2 FY21. Hope all of you continue to remain safe. I have with me our CFO and whole-time director, Mr. Jeevanandam, and Valorum Advisors, our investor relations advisors. I hope you all have received our updated earnings presentation. We've also uploaded that on our website for your reference. In the midst of uncertain times caused by the global pandemic, the oil industry in particular is fraught with the twin challenges of supply glut and demand slump. Though the oil prices are stabilizing in the range of $40 to $45 per barrel, there is now increasing uncertainty in light of the second wave of the pandemic in Europe. In India, while the fear over COVID seems to be receding, the threat remains high, with different levels of risk at different parts of India, posing challenges in executing projects. Our management philosophy has always been to focus on the things that we can control, which, in the context of our business, are two: volumes and costs. Following strict protocols, we have kept our production operation continuing safely with lean teams at all our operating sites. We continue to accord first priority to safety of our personnel and the facility. In Iraq, we have stepped up to the rising demand for natural gas in the region and have produced at an average of close to 40 million standard cubic feet per day in Q2 FY21. This is the highest ever average production achieved in Iraq. This was achieved using the existing infrastructure of 4-inch Kopu pipeline in addition to the 12-inch pipeline, and no additional investment were made for increasing the capacity. The Iraq field has consistently set new standards in terms of project planning, execution, safety, and now it has in terms of production as well. It was a matter of great satisfaction to all of us in Team HOEC that the public hearing for phase 2 of the Iraq project was conducted successfully last month at Tinsukia in Assam. Phase 2 of Iraq development envisages drilling of 3 additional wells and increasing production to 55 million standard cubic feet per day. This successful public hearing was conducted in the challenging backdrop of Oil India's Baghjan blowout and genuine concerns regarding the hazards of oil and gas operations in the minds of the local community. This is a testament to the goodwill HOEC has generated in the minds of local community, the safety record being maintained, and the impactful CSR project executed in the vicinity of our Holong modular gas processing plant. The continuing demand for additional gas to be produced in the region by the consumers gives us further confidence in the long-term performance of this asset. On the policy front, though no announcement has been made on pricing, government has recently come up with guidelines for e-bidding of natural gas produced in the country to standardize the price discovery process across regions. This is encouraging for Dirok, where as part of phase 2 development, Dirok JV is laying a 35-kilometer pipeline to reach Duliajan gas market hub. Once Dirok JV has the infrastructure to supply gas directly to end consumers, a standardized e-bidding mechanism and price discovery process will help Dirok Gas receive market-linked pricing. We expect major consumers to participate in this bidding, including Oil India, who is our sole customer currently. In FY21 offshore field, prolonged customer shutdown and inconsistent offtake have adversely impacted the performance of our wells. This situation continues with declined production from wells. To improve production, rig-based well intervention in the form of workover of existing wells and drilling of new wells will be required. Geological studies are ongoing to plan the next drilling campaign in this unique fractured basement reservoir. Application for environmental clearance has been filed and it is under process. Plan is to commence drilling in FY1 after first oil from BAC. On a related matter, I am pleased to share that the PSC for FY1 block was granted extension to continue operations till 4th January 2021, while the addendum to the PSC for 10-year extension is being processed for execution by the government. This was achieved by both government and HOEC agreeing to refer the outstanding matter of the method for calculation of royalty, whether on wellhead value or on realized sales price, to the Dispute Resolution Committee. To update you on the arbitration award matter of PY3 block, company's appeal has been taken on record in the appropriate court in Malaysia. In the High Court of Gujarat, company's application for vacating the ex parte interim order was heard and the interim order was vacated, consequent to the withdrawal of petition by Hardy. Hardy then filed a new petition for enforcement of foreign award. After hearing both the sides, the matter is adjourned till 22nd January 2021. Coming to B80, our asset of focus for this year, we are well positioned to execute the final leg of the project during the current West Coast weather window. That continues till end April, early May. As you all aware, our second well had to be drilled during the lockdown. This global pandemic has adversely impacted the lead time for several critical equipment and materials required to complete the project. We had to embark on a global search to source items from inventory. We have now sourced all of them from different parts of the world. Two of the most critical items being the flexible pipelines required to export both oil and gas and the single point mooring system called SPM to move the floating storage and offloading vessels. We are preparing now to mobilize the MOPO from Lamprell shipyard in Sharjah to site starting early December 2020. Contract for flexible pipeline is awarded and is to be mobilized from USA. The umbilicals are ready to be transported from Brazil. The single point mooring system is sourced from Batam, and discussions are on to finalize the installation contract with those who are mobilizing the marine spread for ONGC project in Western Offshore. For the evacuation of FSO, Prem Pride is purchased by our group company Hindage Oilfield Services and is getting ready for dry docking at Sri Lanka. For gas export through ONGC pipeline, execution of engineering works is being firmed up in consultation with ONGC for execution. To sum up, we are gearing up to mobilize all the project materials from December 2020 to January 2021 and commence the offshore installation work in February. We estimate the period of installation to be 45 to 60 days, depending on the prevailing weather conditions. We expect to complete the installation works by end March and between end March and mid-April 2021. As soon as the export facilities are installed and commissioned, we will be ready to deliver first oil. Therefore, Despite the challenges, we have so far managed to maintain the project on track. We stand committed to make our best endeavors to produce first oil by April 2021. On the gas marketing, we will follow the e-bidding procedures to be published by the government, and similar method will be followed to determine fair market price for crude oil. Both oil and gas produced from BAT enjoy free marketing rights within India. Our full focus is on bringing BAT to production and to start realizing the revenues from this field. Until then, we would defer any other significant capital outlay in view of the current business environment caused by the pandemic. I now invite Jiva to take you through the financials.
Thanks, Rango. We report that the company made a revenue of 33 crores in the current quarter against 27 crores in the previous quarter. And the corresponding quarter in the previous year, however, it was 62 crores in the standalone accounts. In the consolidated accounts, it is 36 crores against 29 crores in the previous quarter. This increase in revenue is mainly due to better offtake from Duroc. This quarter profit on standalone is 10 crores against 13 crores in the previous quarter. In the consolidated accounts, the profit after tax for this quarter is 12 crores against the 12 crores in the previous quarter. There is not much variations. Total expenses on standalone account is 23 crores comparing 14 crores in the previous quarter. Statutory levies includes an additional payment of royalty of 3 crores paid under protest for FY21. Other costs were akin to the increase in production, such as depreciation, depletion, and the notional exchange loss of about 2 crores. Out of that increase of 9 crores, 3 to 3 and 4 crores related to the non-cash items. For this quarter, the total expenses including depreciation and depletion on the consolidated account is 24 crores comparing 18 crores in the previous quarter. Operating cash flow standalone for this quarter is 29 crores comparing 19 crores in the previous quarter. In the consolidated results, the operating cash flow stands at 28 crores comparing 19 crores in the previous quarter. The company's standalone cash and cash equivalent is about 85 crores as on 30th September, and the cash and cash equivalent of consolidated is 110 crores. In case of BAT development, mobile offshore processing unit is ready to move from yard at Dubai, and FSO is to be dry docked while the single point mooring is procured and installed before the end of the financial year. These facilities are resourced through our own subsidiaries with borrowed capital of about 85 crores, out of which 43 crores are yet to be drawn to meet the cost towards SPM and installation. These assets such as MOPO and FSO are mobile assets which will add substantial value to the service business of the subsidiaries during the captive use in BAT field. Our current liability in standalone account is 87 crores as on 30th September, and our current assets excluding subsidiary loan and inventory is about 154 crores. In consolidated current liability is 152 crores and the current assets excluding inventory are 192 crores. This makes it we are not constrained for meeting our obligations. We are confident that we will meet our obligations and would monetize the BAT investment in the ensuing financial years. All our subsidiaries will be on the revenue mode from the next financial year. With this, we will embark on an unhindered overall growth of E&P assets of HOEC as well as the oil field services of our subsidiaries. Thank you.
Thank you. Anuj, we can open the forum for questions now.
Okay. Operator, please go ahead.
Thank you. Ladies and gentlemen, we will now begin with the question and answer session. Anyone wishing to ask a question may please press star and 1 on your touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is on the line of Chintan Seth from Samiksha Capital. Please go ahead.
Thanks for the opportunity, sir, and congrats for the good recovery for the Duroc. Sir, one point I wanted to check on Duroc is that because of the oil India field fire incident, the incremental volumes might be coming from that demand, or there is actual underlying demand has grown in the region?
Chintan, it is both. We see a trend where the underlying demand also seems to be growing. course, on a interrupted basis, the Bagjan incident also ensured that Oil India was not able to make its full commitment, so it was drawing. So ultimately, we supply only to Oil India. Oil India in turn manages the local demand, but we also see the trend in increase in the underlying demand.
Okay. And secondly, on the FY21, you did hinted towards that post BAT will take up the project for the additional well drilling and all. But the extension, how confident you are that 10-year extension we will be securing, and what are the hurdles right now with the government on the royalty and the additional revenue sharing issue which you have talked about?
Yeah. Chintan, we have received the letter of extension for the the condition that the outstanding issue, which was to do with how to calculate the royalty on gas, whether on wellhead basis as claimed by us based on statutory notification, or on basis of the realized sales gas price. Now, this issue was one of the conditions put by the government. Therefore, we engaged with the government and reached a consensus with the government to refer this matter, because the matter is based on statutory notification, to refer the matter to a dispute resolution committee and proceed with the execution. So this has been agreed by the government. The matter has been referred to dispute resolution. So there is no other hurdle. It is simple the process of getting the amendment signed within the internal process of the government. That is going. Therefore, the government parallelly gave us a written authorization to continue operation as they process the case for the formal amendment execution of the PSC for the next 10 years. And this is a practice the government has followed in all other blocks as well. So we are absolutely confident there is no risk to the extension of the PSC as such.
Any committed capex we have to incur on that to get the extension, or this is the only issue which is being reviewed currently?
No, this is the only issue which was there, and this now having been referred to dispute resolution committee, it's a matter of process for signing the amendment.
Right. And lastly, on the Kharsan, sir, we booked some additional royalty there, I think. And if I check the overall volumes, also I see some softness in the Kharsan volume as well. If you can update on that part as well, and the extension there.
Yeah. The Kharsan also is undergoing, the government overall, if you look at this is a matter of public record, government in its extension policy had put one of the conditions, whatever be the outstanding revenues or demands of the government from the contractors will have to be settled before the extensions are granted. So several legacy issues come up before the extension, and in respect of Kharsan, there was an issue related to the how to treat the delay in obtaining forest clearance in the past in terms of the cost recovery limits. Now that was debated in the management committee, but meanwhile government gave authorization to the contractor to continue the production operation, and in fact the mining lease for Kharsan also has been issued for the next 10 years. So the formal amendment will be done after the issues related to the cost recovery is resolved. That is ongoing at the management committee. That is handled by the operator of the field as such. That is at the extension. So we don't see any risk to the extension there. Any investment, as you are alluding, by any contractor will be made only after a formal amendment is executed between the parties. That is, I think, understood by both the government and the contractor. On a day-to-day operation basis, in Kharsan is slightly different environment compared to Assam, where the law and order situation and the pandemic situation is slightly different. So right now the field is operating, producing an average of around 600 barrels per day. And further investment in the field will be made only after these issues have been resolved and the amendment is executed.
Okay. And lastly, sir, on the liability front, we saw a sharp drop from March to now. I believe some part of that is related to the payments made to the vendors for the BAT. Can you highlight and clarify any specific, other than that, any specific reduction in liability?
We have settled with most of the contractors, and only one contractor has gone to arbitration, which we will also settle by the year end. We have got adequate cash at the moment in the bank to settle all our liabilities, and we have no issue thereon.
So any payment we made to Hardy on this front?
Hardy, we have not made any payment. We are not required to make any payment at the moment, because this case has been deferred to up to 21st of January next year, and it is depending on the outcome of the Malaysian court and then against about the Indian court. Our contention is this award is partial, so it takes its own course of time. When the court asks us to deposit, we are capable of depositing the money immediately.
Okay, so it's purely related to BAT vendors mostly.
That's it.
Okay, sir. Okay, I'll jump back into. Thank you.
Thank you. The next question is on the line of Tejas Shah from Unique Stock Broking. Please go ahead.
What the oil, BAT oil that you are saying will start only around April 18th.
Sorry to interrupt, Mr. Shah. Sir, we are not able to hear you clearly.
The oil production of BAT, that will only happen around April 2021. So what is the revenue you are looking at from that? And currently the gas prices have gone down, and only production is, I think, Dirok. So this is what the same run rate we will see for up to March 21?
Yes, as Ilango has told that next year only we will be having a production, next financial year only the BAT production will start. Till the time we will be having the current level of production and the current level of revenue, which is lesser than the current level of revenue because the gas price has been reduced. And unless there is...
what is the hit that we are looking at this quarter?
Which quarter?
Current price is about $1.9 per MMBTU.
And that we are looking at actually there should be some revision or something will happen, then there would be an improved results in the last quarter of this financial year. And we expect the third quarters would be a little lesser than the current quarter.
Okay. Okay, thank you.
Thank you. The next question is on the line of Rohit Koti from Marshmallow Capital. Please go ahead.
Thank you for the opportunity and thank you for the detailed remarks in the beginning. So my first question is on Dirok Phase 2. When is it expected to be commissioned? I think I missed that.
Yeah, Rohit, what we are doing currently is to get all the regulatory clearances that is required for the project. And there have been delays because of the pandemic situation. The most important one was a public hearing. So that was something initially planned to be held in sometime in March 2020, but got postponed and finally it got held on October 23rd. Then the process of environmental clearance will go through. And second is the forest clearance for the 35-kilometer pipeline. There also the application is under process. There has been some delays due to the current situation. And second thing, we also felt, given the current overall pandemic situation, doing onshore projects, which is outside the confines of our operating plan, is exposes to us, the company, to unmitigable risk as such. So what we thought was to really focus on the offshore project in BAT, complete that, and in the meantime, get all the required statutory clearances and then execute the project. Project per se, as you've seen from this quarter, we already have facilities to deliver about 40 million cubic feet consistently against the planned capacity of 35 million cubic feet. To increase the production, primarily required drilling of the well, which will be undertaken only when the pandemic situation improves. So we are not really expecting the additional production through additional drilling to come in the next financial year. It will be after that only. So we will give you a clearer indication of timeline for DROC 2 after once you obtain the regulatory clearances as well as the pandemic situation improves.
Okay, understood. That was helpful. And sir, the next question is on FY21. So, so while it's so a ramp up after you and Jiva sir took over, it has been quite erratic in comparison to your other field. So why the focus? I mean, and we have done a workover and increased production, and then again because of weak offtake, the production has fallen off again. So if you could expand a little more on why we are focusing on this asset next after BAT, and if the offtake is so erratic, is it related to the pipeline issue? Is it related to the customer issue? And how do you expect this to be resolved given that we are going to focus on this next?
No, Rohit, the first thing to remember is FY21 is 100% owned by HOEC, and we already have all the development infrastructure which has the capacity to handle much higher volume in terms of the processing capacity and pipeline capacity. What is really required is to drill the well. Obviously, being an offshore well and this being a very unique fractured reservoir, which is unique of its kind in India, it has got its own technical challenges. But what we thought was the issue related to marketing is really once you reach a higher threshold. For example, this plant is located next to the PPN power project, which initially the FY21 gas was going 100% to that plant, but that plant requires a minimum of 17 million standard cubic feet per day. If the volume is below that, and they cannot operate the plant. Therefore, when our volume reduced to below 10 level, then the GAIL diverted into smaller consumers in the region, including some power projects as such. So what we believe is, if we could drill the additional wells and increase the volume, we can then look at a different marketing strategy, if required with some additional investment to take the gas to the market. And we are also seeing in the context of the Ennore LNG plant, which is set up in Chennai, IOC is also increasing the pipeline capacity, grid network in and around that region. So you're right, we would take the investment finally based on both the technical risk as well as the marketing part, both of which we believe has got a potential, particularly in the context of growing city gas distribution in the region, where several new licenses are being awarded by the government. So we see the scope for in the area of city gas distribution, and therefore, when the volume is revived, marketing is not going to be a real challenge. That's what we believe.
Okay, understood. That was helpful. So, as of now, is there any constraint on the pipeline side, capacity of pipeline in that area?
No, as of now, the really constraint is twofold. One is the power plants. As you know, in Tamil Nadu goes the merit order. Our gas price is $3.65 per MMBTU. This is a contractually committed gas price. Therefore, in the merit order, when the rest of the country, the APM or the domestic gas price, the guidelines is about 1.9. This is at 3.65. Therefore, in the merit order, this gas-based power plants come lower. So we need to look at segment which is outside the power sector, particularly city gas distribution, to market the gas, which can absorb a better price.
Understood. That was helpful. So, and my last question, the start of the Indian gas exchange that happened a couple of months back, how do you see the impact on it of it on producers like us?
It's a very positive development, particularly for our field in BAT. So Hazira has been declared as one of the delivery point under that exchange, which means anyone in Gujarat who is ready to take delivery of gas at Hazira can bid for it and take at a premium price. Certain volumes can be sold with the delivery being happening in Hazira. Because our gas will, through ONGC system, will go to Hazira. So we see it as a positive development. In fact, we are actively following it. We made some suggestions for having a similar hub in Duliajan. So it's a very positive development. And I see like the way the power segment got transformed with the exchanges, there's a good long-term future for this segment.
So does this reduce your marketing effort, which you initially were planning once BAT came on stream, and there is no issue as of now with, because GAIL pipeline, I'm guessing, would be used for transportation of gases, and there is no issue or procedural or any other issue on that front, is it? Am I right in thinking this?
Yes, Rohit. This really clarifies, particularly in the back of the recent government guidelines on e-bidding. It makes it very, very transparent, effortless, and quite competitive.
Okay, perfect. Thank you. Thanks a lot for the answer, sir. I'll get back into the queue.
Thank you, Rohit.
Thank you. The next question is from the line of Kishan Mundra from Systematic Group. Please go ahead.
Yes, sir. Hi, sir. Two questions from my end. So firstly, the employee benefit expenses, sir, the total quantum looks a little low compared to the size of your company and compared to the amount that you spent last year. So if you could throw some light, is it the case that some of the payment that you're making is classified as consultant's payment and hence getting included in other expenses, or is it actually so low?
The employee expenses last time was the one-time bonus given to the executives, that is about 3 crores. But for that, whatever the total employees are working on the project, which is within the group as such, where we are the operator. So we are able to charge it to most of our expenses to the respective joint venture partners, as we are working on their behalf, they being the non-operators. So that is why our cost for the company per se is come out much lesser. So this would be the trend in the future, as we are embarking on many of the projects on online now.
Okay, and our share of the employee expense, do we have to charge it to profit and loss, or do we capitalize it as well?
Depends on the project. If it is a project where the production started, we will be charging it to P&L. If it is on a construction project like BAT or the new development in Assam or FY21 development, where the people associated with the development will be capitalized.
Okay, understood. And the second question, sir, you made a payment of rupees 3 crores for the dispute resolution. So where have you classified that, sir, in profit and loss account?
That has been charged to P&L account, this being a royalty payment. Normally it is paid under protest. We can take it as a receivable because till the dispute is to be resolved, assuming that would be in our favor. For conservative and beyond prudent basis, we have charged it to the P&L account at the moment. That's why the current year profit is reduced by 3 crores.
Okay, sir. Understood. Thank you.
Thank you. The next question is from the line of Chintan Seth from Samiksha Capital. Please go ahead.
Thanks for the opportunity, sir, follow-up opportunity. One question on the e-bidding. How
Mr. Seth, sir, your voice is sounding muffled. Can you
is it better now?
No, sir, it's still the same.
Wait a minute. Sorry for that. Yeah, is it better now?
Much better, sir. Thank you.
Yeah. Sir, thanks for the follow-up. On the e-bidding side, if you can elaborate how the earlier contracts would be impacted because of that, because earlier the gas marketing freedom was not there in few of the PSAs, but e-bidding will allow marketing freedom. So how does this work in the new region?
Chintan, e-bidding, basically wherever the marketing freedom has been allowed, which now for any field development plan that is approved after 1st April 2019, anywhere in India, enjoys the marketing freedom. The pricing, discovery of pricing, this government wanted to come up with a clear guideline so that the discovery process is transparent and efficient. So the guideline basically would specify, they will notify the detailed procedures on which are the exchanges and how will you discover the gas price by allowing market participation. So, but wherever the marketing freedom is not provided, there the existing contractual arrangement will continue. For example, in FY21 we have a executed contract for the initial development with GAIL. That will continue. For B80, we enjoy full marketing freedom, so we will have to use the exchange to discover the price.
Right. So the PY phase 2 PSC and Kharsang extension, because it is happening after the April 19 date, that will enjoy marketing freedom.
Correct.
And PY Dirok phase 1, that is existing one, continue with the old regime.
Correct.
Oh, sure, sir. Thanks for the clarification. That is all from me.
Thank you. The next question is on the line of Hitesh Doshi from Nirjar Securities. Please go ahead.
Hello.
Yes, Hitesh. Yes, we can hear you.
Yeah. So, good afternoon, sir. Sir, all the 2 wells of phase 1 will start production in April as per our current schedule, or only 1 well will start in April?
No, both the wells will be commence production simultaneously as per the current schedule.
Okay. And sir, what can be the potential of phase 2, and I mean very macro, and when can we start working on phase 2, and what timeline it will require to ramp up the production there? It's just very, I mean, quite early stage question, but yeah, if you can guide us.
No, Hitesh, as you said, this is a very too early question, because we really want to focus on executing the project. The only thing I would say is, in terms of the facilities, we are creating the process facilities capable of handling 10,000 barrels of oil per day. The storage capacity we have in the vessel is about 900,000 barrels per capacity. So we will not be required to put new process facilities. Depending on the performance of the wells during the first 6 months or 1 year, we'll come up with a plan to drill more wells in future to keep the production extended.
That can be at least 1.5 year away on production side, phase 2, at least 1.5 year.
Yes.
Yeah. Wish you all the best, sir. Wish you all the best.
Thank you.
Thank you. The next question is from the line of Shriman Dodoria from Unifi Capital. Please go ahead.
Yeah, good morning, gentlemen. Thanks for the opportunity. So firstly, on Dirok production in this quarter, which was higher than the earlier the production capacity there. I missed, how did we do that, and what is the scope further there?
Yeah, Srimad, if you recall, when we began the Dirok has got 6 wells. 3 wells were drilled earlier, and the 3 wells were drilled by us in the last campaign. Yeah. So when we wanted to bring the field quickly on production, for the earlier drilled 3 wells, we laid a 4-inch pipeline and to a place called Kusijan, where Oil India has got some spare processing capacity. We use that to supply the gas. So that's how we commenced the early production in Dirok initially. Then we laid a 12-inch pipeline with this plant at Halong operated on our behalf by Expro. That plant has got a capacity to process about 35 million cubic feet per day.
Okay.
So demand was more. We activated the phase 1, the initial early production system also into operation. So simultaneously we were transporting gas from both through 12-inch line as well as through 4-inch line, and 35 million cubic feet of gas was being processed at the Halong plant, and about balance 5 million cubic feet was being processed Kusijan plant of Oil India, for which we pay some transportation tariff to them. So we were able to meet the full demand of 40 million cubic feet. So this model we have tested now. It can operate on a long-term basis also. So it kind of gives us confidence that so we can continue to meet the demand as the demand comes up.
So, does the Oil India processing facility can max process only 5 million standard cube feet per day, or it can process more?
No, it can only process that amount. So we would need, in the long term, we will need our own facilities, including the pipeline.
Okay, got it. And on the B80, earlier we had kind of a oil price of about $45 for marketing it. Do we stick to the same price range, or is there any revision to that?
That B80, that we have to take the price from market. So we are comfortable even at $35. We'll be able to make adequate returns to the company.
Yeah.
So anything above $35 will add our revenue, such on both at the top line as well as at the bottom line.
Okay, got it. Thank you.
Thank you. The next question is from the line of Sunil Jain from Nirmal Bang Securities. Please go ahead.
Yeah, good morning, sir. Sir, my question relates to for B80 only. We had
Sorry
seen.
to interrupt, Mr. Jain.
Hello?
Sir, can you speak a bit louder? We're not able to hear you.
It's okay now?
Much better, sir. Thank you.
Yeah, thank you. Sorry for that. We had seen earlier that the B80 missed the weather window last time. So we are very near, starting very near in April. So is there in any process you got all the equipment and now you have to hook up all together, and you might need some permission also. So anything which can delay this process, and we may miss even this weather window also?
Maybe, I don't know, we are, in terms of commitment under the contract, we will be 1 year of schedule. If you deliver the oil in the, we'll be 1 year ahead of schedule. So right now, as I explained in sufficient detail, in the context of the pandemic situation, our focus was first to ensure we are able to source all the project material required for the project. This was not available. The lead times have gone all over the place. So now we are comfortable. We have sourced all the material required for the project. As I explained, we are mobilizing them, and our actual job at the field is, as I said, 45 to 60 days only. We can even do it slightly faster if the weather window permits. In offshore, everything is determined by the weather as such. So we've got the mix, and we are going ahead to commence, and we remain confident to complete it.
Any approval is still pending?
No approval for the project-related matters. We've got the environmental clearance. We have got other clearances. But obviously, when you import equipment, you need to get the routine custom clearances. Any vessel moving to offshore work will require naval clearances. Those things we will get that, and the government, ONGC, and DGH is fully supporting. Remember, Mr. Sunil, that this is the first offshore projects to offshore discovered field to come on production under the new policy. So we are getting support from government. A lot of proactive reviews are taking place. So we don't see any regulatory constraints. But these approvals have to be taken when you bring in the material only.
And hook up to ONGC pipeline, that permission we had already got.
Yeah, that permission we already got.
And sir, you said that 8,000 oil equivalent BOPD. So that include 5,000 of oil and balance gas.
Correct.
Okay. So we will be getting more than 17 MMSCFD gas.
We'll be getting, during testing, we got between 15 to 20 million cubic feet. When we put on the production, that is what we are expecting. Maybe the oil will be slightly more, gas will be slightly less. But overall, we are confident of the 8,000 barrels of oil equivalent.
And sir, PY1, we know the history, and in near term also production came up and went down. So how much confident you are with additional well you will be able to quite successful in this?
We will do adequate technical work and we will have it all peer reviewed by independent third party before we embark on the project. Recently we have, as head of technical, we have one Mr. Christian who has joined. He particularly has got a lot of experience in similar, having worked in similar reservoir in UK and globally. He brings in a lot of technical expertise to the table. He's been working along with the team on this. So our effort is we will do whatever risk mitigation required, but we cannot change the fundamental risk of the business that we are in. But we will do what, based on the experience, we will do whatever we can to mitigate and take prudent steps.
Yeah, but see, what is so attracting us to invest so much money, again, which is the field which has not got poor, which has got poor history.
Sunilji, I think I responded to an earlier question. What we need to remember is the company over a period of time has invested over $400 million in this asset. It's a very large asset, 200 acres of land and a fully well-built gas processing facility and a 50-kilometer pipeline offshore and the only platform available in Kaveri offshore. So very rarely you will get such a developed infrastructure readily available anywhere. Of course, we've got, so what is simply required is to do the technical work to de-risk and drill the wells. Every time we may not be right, but drill the wells. Once you drill the wells, there is no other capital investment required. Of course, as we discussed earlier, we have to tie up on the marketing front as well. The advantage here is this is 100% owned asset and huge investment has been made in the past. Therefore, there is no, there are yet to be recovered costs which comes without any sharing of profit petroleum to the government. Therefore, we see both fiscal terms wise attractive. Obviously, we have to do our job of mitigating the technical risk, which we will do.
So how much more investment we need to do means to drill the well?
We will talk about PY1. After we deliver P80, we'll come up with all the details. Because right now, to make estimates on how much it will cost in the current environment is very difficult. We will do that.
Okay, fine. Great, sir. All the best. Thank you very much.
Thank you. Ladies and gentlemen, in order to ensure that the management is able to address questions from all participants in this conference, we request you to limit your questions to 2 per participant only. The next question is on the line of Nirbhay Mahawar from M Square Capital. Please go ahead.
Yeah, just a follow-up on BGT, sir. You mentioned that in phase 2 expansion, the total current capacity we are building infrastructure is around 10,000 barrels. This is just for oil, or this is oil and gas put together?
This is just for oil. That is the capacity of the mobile process unit that we have mobilized.
Okay. And is there any constraint in terms of gas evacuation also? Capacity constraint?
No.
So that can, any amount of gas
Not any amount. Any amount. It is currently designed for about 20 million cubic feet per day. And with minor modification that can also be expanded in future if required.
Okay. And is there any sense on the additional discovery which we are expecting that is primarily going to be oil or gas related? Second trap which we have mentioned.
Where in BAT?
Yeah, in BAT, new lead in the Deccan Trap formation, which we have discussed.
Yeah, then that would require drilling new wells, but it is more like, it appears more like oil only.
More likely to be oil. And sir, on the Deroc side, in phase 2, will be eligible to the market-based pricing, or there is any confusion in terms of phase 2 will be for the control pricing?
No confusion. Phase 2 will be able to, we are entitled for market-determined pricing. Okay.
There is no confusion on that. Okay. And this...
Sorry to interrupt, Mr. Mahawar. Sir, may we request that you return to the question, please?
Thank you.
Thank you. The next question is on the line of Rohit Koti from Marshmallow Capital. Please go ahead.
Yeah, so thank you for the follow-up, sir. Just, I think a couple of calls back you had mentioned that you might see some upside potential from what we had estimated in the past for BAT. Is there any further update on that?
Rohit, what we thought was we will put these fields on production for monitoring, but we do see the upside as we indicated earlier and disclosed also in the deeper prospect. But in any case, they would require drilling of wells in future, which, as I mentioned in the call, not before at least 1.5 years of production history as such. So.
Okay, that was helpful, sir. My second question is for FY21. So you mentioned we have 200 acres of land for the facility there. Are we fully utilizing the facility, or is there some part which is excess and we intend to keep it with the company, and there is no plan to dispose of that excess land if that is available?
No plans to dispose out. We have got underutilized capacity in terms of the processing capacity. That is one of the reasons we mentioned that we will continue to really look at the drilling campaign in FY21 after doing all the required technical due diligence.
But there is excess land available in that location?
Yes, correct.
Okay. Thank you, sir. Thank you.
Thank you. The next question is from the line of Manan Patel, an individual investor. Please go ahead.
Hello. Can you hear me, sir?
Yes, Manan.
Thank you for the opportunity, sir. So my first question is regarding BAT. So we were planning to enter into a contract with someone for the gas, but now that it is a bidding route, so every time we will have to look for a buyer, or can we still enter into a contract with someone in terms of volume and price can be determined through bidding?
Yeah. Correct, Manan. We will enter into contract with a buyer for a long-term basis. The price will be determined through this bidding route.
Okay. So volume offtake will be ensured.
It will be ensured, yes.
Right. That's great. So my second question is on your perspective on the natural gas prices globally. So we have seen that they have started moving up of late, probably because of the winter season also. But in the next few years, how do you think about natural gas prices globally in the context of what is happening to the oil?
What we see in the context of India is the government is keen to open up free marketing across India. So they are doing it in phases. As I said, any field development that is planned, that is approved after 1st April 2009, enjoys full marketing freedom. There was some confusion about how does one determine pricing, whether affiliate company can participate or not, those kind of issues. Now, those have also been clarified through the rebidding process. And the second thing is the government's focus on the city gas distribution, where today the India imports around 50% of this gas through LNG, some of which through spot LNG, some of which through long-term LNG. So overall, we see the Indian gas price to be definitely to come back to the previous level. Several years back, it was about $4.2 per MMBtu across India. So I would expect it to really be in that range for sure.
And in terms of APM determined pricing, even that you feel like there is a chance that there will be some lower floor for that price coming, or what is your sense on that?
I have no idea because earlier there was a media report, but nothing really has happened. So I am, unable to comment on that.
Okay, got it, sir. Thanks a lot. That was very helpful.
Thank you. Thank you.
Thank you. The next question is from the line of Chintan Seth from Samiksha Capital. Please go ahead.
Thanks for the follow-up, sir. I was looking at our annual report, latest annual report, where our proven and approved, developed and undeveloped reserves data has been provided. I think BAT data is not included because the discovery and production estimate came after the finalization of the annual report, or is it included?
That BAT, that probable it is included there into the proved and probable. It is an undeveloped resource. Undeveloped resource, it is there in the books asset. That will update that on 31st March again.
Okay, but that will revise upward because the potential has revised after the April drilling happened, right?
That's right. We will be getting it supported by the third party, and we'll third party Gapnik client is reviewing it, and that will get updated in the March accounts as such.
March account. Okay, but the approval last time we were talking about that study is being carried out and will be releasing in a month or so. So it got delayed or why?
Having so many iterations because there are 7 well data and the people are working on it. And there is a lockdown in London also, so that's why it's getting little delayed there.
Sure. And when are we expecting that?
I think we will be doing it as such, and the reports are constantly being interacted with our team and the team and GCA. Once by the next quarter, we should be able to get it.
Sure, sir. Thanks. I'll follow up then. Thank you.
Thank you. Ladies and gentlemen, that was the last question. I now hand the conference over to Mr. Elango from Hindustan Oil Exploration Company Limited for his closing comments.
Thank you for participating in Q2 FY21 results. At HOEC, we are in for some hectic, challenging and exciting times with the BAT project execution of reaching its final lap. Being the first offshore field to come on stream under Discover Small Field Policy, ONGC, DGH and government have been very supportive. We will remain sharply focused on delivering first oil and will keep you all fully updated. For any further questions, request you to please reach out to us or our investor relationships advisors. And before closing, let me on behalf of HOEC team, wish you all a very happy Diwali. Thank you.
Thank you. Ladies and gentlemen, on behalf of Hindustan Oil Exploration Company, that concludes this conference call. Thank you for joining us, and you may now disconnect your lines. Thank you.